Alright guys, I am back again with another video, and in today's video we want to take a look at trading stocks with Ichimoku. I'm going to show you some stocks that you could look at, like Apple, Home Depot, Costco. We'll look at those and a few other ones, and we'll use Ichimoku concepts, and I'll show you how you can assess the market and get into good trade setups. I'm also going to be looking at the money flow index, where we will be looking at trading divergences. So I'm going to show you how to spot tops and bottoms with Ichimoku, adding divergence with the money flow indicator to help you understand and know when the market could possibly turn and make a directional change, or maybe a correction or whatever. So I'm about to show that to you. I'm excited to give this to you because I know you're going to enjoy this. All right, so let's get started. Here we go. So we're starting off with some stocks. I want to start this off with Home Depot. I'm doing this for Gary because he wanted to look at some stocks. So I want you guys to understand something and look at this. So I'm using the money flow index right now, and I was using the cumulative volume. All right, so anything to show me divergence basically, but I took this off for a purpose, a reason, and that's not showing on this chart. And I think it was one of the, I'll have to look at one of the charts and see how this was, but I was getting a very nice divergence on the money flow index, but I wasn't getting the divergence on the cumulative volume. And what happened was I was looking at the chart and I was like, we're at a double top and there's no divergence here. Well, when I put the money flow on there, there was a divergence. So the divergence that we're looking at, guys, is this. This is really this area here when we look at this, and that would be here. So we got these areas. This next area, basically, we could go to here and we can go to here, and that would be here on the chart and then here on the chart. And this is going across. I look for trades when I have nothing on my chart. I definitely look for this trade all day long. And I'm going to show you a trade I took today in the futures market, trading the E-mini S&P 500 with nothing on my chart except just waiting for this to happen, because I'm trading, sometimes I'm trading a 2-minute chart or I'm trading a 2,000 tick chart, and I just wait for price to come to a double high or a double bottom, or this would be considered a flat level. And if the market was sitting up at this level and I had divergence, I would think about probably shorting that level. But at this point, you could see this was a big double top here. And if you don't pay attention to divergence, you maybe get caught in a bad trade. And then this thing dropped off. All right, so what's it doing now and where is it at now? So this is why I'm going to take one of these off my chart. I don't like a lot of stuff on my chart, so I'm going to take one off my chart. I'm going to stay with the money flow index. And I'm going to get rid of this. Get rid of that. So what the market did, it's not showing me a divergence here. All right. And we had a big move to the upside. So I'm not like seeing anything that's helping me to believe we're going to push higher. In reality, I really don't know. I felt better when it was down here that it may push higher, because you had the distance right here with Tenkan-sen, this distance. So when you get that distance, you kind of know the market may push back to the upside, especially if you had divergence. At this point, we didn't though. But if you have divergence and you have this, like you reach this bottom and you have the distance between Kijinsen and Tenkan-sen, if you have a big distance like this, then and you have divergence, and we'll probably see some charts like this, then you definitely want to look for the move to the upside, because you're going to mark the low and you're going to have your stop loss below that low and you're going to trade to the upside. Now with Ichimoku, you'd be going against the rules, okay? But when you're looking at the market period structure, Ichimoku helps you to know this as a bottom. So maybe if you're trading and you're in a trade, then maybe down here you realize that the market may push back. But for me, a lot of times what I see, that divergence along with a big gap like that, I'm counter trend trading that. So now what are we looking for? We're looking to see what the market's getting ready to do now. There's no divergence, but the money flow is bullish. And overall, it's bearish, the longer term. So what I do sometime is this, like I'll do this to see what's happening. And it already broke on this, I believe. So I'll put a line here. You could just mark this just like it would be your chart. All right. Put a level there. Make sure I got that good. And then what I'm going to look for is a violation of that level right there. So this candle probably right here. And then I would look for the long opportunity because we broke the downtrend of the trend line on the money flow index. But now what's happening is we're in this move here. So is the market just correcting? Well, we broke the trend line, so that's a good start of a move higher. And the second thing is we got a low, and then this may be a higher low. I suppose this could be counted as a low because it's a fractal already. So if the market doesn't close below that point, then we're probably good. I wouldn't look, like if I'm in Home Depot, I would stay in Home Depot right now. I wouldn't worry about getting out of it at this point because there's a good possibility that it's looking to recover here. But the second thing is, so what I would look at is this. So if Home Depot comes down to this level again, and I would make this into a zone. So if Home Depot comes down here, and if you're not in this, or if you're deciding to get in this, I would get into it. Well, see, Ichimoku is going to tell me different, so it's kind of hard for me to talk to you in with two different mouths. One mouth is Ichimoku and the other mouth is structure and just knowing the market and understanding the market. If the market comes down to this point right here, anywhere in here, and this is heading to the upside like this, what do you guys suppose is going to happen? Anybody? I'm just waiting for one. Is there one? So Gary said go up. That's what I was looking for. The market is going to go up. I'm going to see your questions right here now. All right, so yeah, we suspect the market to go up at that point, and that's if it came down to that level. So like I'm trying to say, so Gary, basically, if I was in this stock, I would stay in it right now. My definitely give up point would be if it closes below this level. But if I'm not into it and I'm looking to get back into it, or I want to add some more onto it, if it drops below this point, then we're looking for the market to move higher if we still have this movement on the MFI. Because with the MFI moving like this is showing that institutional traders are with the longer position. All right, but how long will this be? So if it comes down to this point, that's what I would do. Now, if it closes below, I would probably try to get out of there for a little while. Now, the second thing is, the last thing is, we may be seeing a reversal because, and the reversal is like this. So then we would see where the market's going. So what it would be doing now is basically, let's put some fibs on here real quick. This move to that point, we're about looks like a 61.8 retracement, okay, at this point right now. 61.8 retracement, and possibly move back to the upside. Where would our targets be if we did get into the trade in this area, if we got into it at this point? But right now, even if you're in this trade, look for the market to push back to this level, up about here. So you pretty much think if you're in here, you're probably good up to level 2. And then maybe if you violate level 2, you're going to look to get up to Kijinsen. And then this level here at about, what's that, 385.91. So that's where you think the market should be moving up to. At this point, it may correct itself again. So we could see a move pushed up higher right now. So let me do one more thing here. I don't want to get too deep on this, but I'm going to put a little time analysis on here. I don't want to get too deep on this because we'll be here long. So let me do it like this. Let me see exactly what the days are here. All right, so we don't have any Kian-Suchi numbers. I mean, any Kian-Suchi adding up. So Kian-Suchi is just our numbers. Let me go with this and see how long that took. That took 14, really 15. And then to this point, 22. Then looking at maybe a low at about 26. So maybe another day of a little bit of downside, or maybe we see the market move higher tomorrow because we're landing on 26. And if at 26 we didn't violate this low, so there's a good possibility we see the market move to the upside. Maybe sit here tomorrow. I don't suspect a lower low because look at you got supply coming into the market. I mean, demand coming into the market, right? So with this demand coming into the market, we should start to see the market push higher. Now, you did get the push here, but we're still seeing that demand coming into the market. So I believe that you're going to see Home Depot push to the upside. All right. Is there a particular place, height you should put your time analysis? So we can't discuss that a lot right now because I'll be here really long. But the particular place would be highs or lows. Okay. You want to put it on high or low. All right, because there's certain things you're looking for with time analysis. You're looking for the day of change, okay? And so when we're looking for that day of change, we're looking for it's to land on these numbers. All right. So if we're looking for that, we go from the highs and lows, or else we could take the market. We could do this. We could look from low to low. How long did it take to get to that low? All right, then we could go, there's so many different ways to do this. We can go high to high, and that was 21 bars. So what we could find is do we have a relative number that we're matching with? Like if I said, let me give you an instance. It's not going to line up right here, right now, because I don't see anything that's really lining up. But let's say we said this top was 14 days, right? Then we take this top, 14 days, right? So then the next thing we would think would be this. Now this didn't happen, but we would be thinking around 14 days, we see a high. All right, another high. Now that high could be right there, but it wouldn't have been. It would have been here because there was no other highs in that point. So that's something that you would be looking at. Another thing you could look at is like maybe from your V wave. How long does it take for a full V wave? The V wave is your highs and your highs. So then if we were looking at lows, we could do the exact same thing. Now, if we're looking at just where would the market change, we could take this and put this on any high or low we want to. Mainly, I like to put it on the midpoint high of the chart. When I look at the chart, I want to put it on the highest high or the lowest low. Now, if the lowest low is too far back, I don't want to do. I want to stay in the range of the numbers. Okay, so like I can put it here, and then I can tell you, okay, well, looks like we could have something happen on day 42. All right, I don't know if it's going to be a high or a low, but when the market got to that point, I would start to understand. So if I move this over to here, I'm still saying the same thing. We could see something on 51. All right, could it be a low? Could it be a high? Maybe the market does this. If we said the market was going to move higher, right? This went from, we could go like this. This low to this high was 7 bars. So if we're 7 days actually. So we could say from this low, and it would be here, we could see a 7-day move, right? Which would take us right to 51 pretty much, because give or take one, plus or minus 1 or 2 days. And this would actually be 9. And it all depends if I use this level, but I'm using the low. So the lowest point right here. So if I move that, so what I'm saying now, took 7 days to move higher, we could see another move, which would be 7 days, which would be this. So here's your move higher, 7 days. So our next move higher, 7 days. What would that give us? What would that give us, anyone? All right, so you guys got it. It would give you an N wave right there. And that's what you would see. So that's what I see with the market there on Home Depot. Let's move on. Next chart. Going to be looking at, what are we looking at? Oracle. So I believe I told Gary Oracle looked good for a move to the upside. Didn't I say that? What did I put in the email? Was it Oracle? Okay, yes, it was. When I look at it right now, well, here's what I see. So from this point to this point, the money flow is moving higher. What's that mean? That means institutional traders are starting to come into the market, which means we have more demand coming into the market. And from this point where that started was right here, because you're down here, these two lows, one is higher than the other. It shouldn't be. It should be lower because this is low. It should follow just like the chart's showing you. That's what it should do, but it didn't. It's not. So we're looking for the recovery. So now my thing here is we're seeing the recovery quite possible and a move higher. Also, what's real good, what else is good that makes us think, David, you said it before, you showed it before I could say it. All right, but David's on point. This is the cloud. Look at this flat top. So span B is flat. Look at the big, thick cloud in the distance. Whenever you have a cloud like this, and now span A is starting to roll up, and when it starts to angle, there's a possibility that the price could come to here. Then you'd have even more divergence. And then I definitely would be looking to go long. Based on Ichimoku, we wouldn't be looking to go long. But Ichimoku's giving me these signs. So based on Ichimoku, I wouldn't take a trade because I would be trading Ichimoku direction-wise. But if I'm trading the market and I just want to trade, I would definitely see these things with Ichimoku, and I would take this long trade with divergence down here at this bottom if the market failed to violate this low. So I would make this into a zone. Now at this point, if the market doesn't even come back there, then we will watch the market violate this structure a little bit. And then you'll see it push up through Kijinsen. And then that's when we should see the market recovering. Now the levels that I would be concerned with would be the levels I'd be concerned with would be this. This level right here. Oh, sorry, I marked the wrong one. It would be this one right here. And I would make this into a bigger zone. I'd make it like this. So quite possibly the market pushes back up into that area. And then once it gets there, when we start seeing higher lows, then we realize which way the market's going. Now we'd have to get through this resistance here, which is this top here, this fractal level. If we can get through that, then I suspect to see the market continue higher up to the cloud, and then maybe eventually we get that break. But this is so much distance here and so thick that we definitely are probably at a bottom right there. Good time to get ready to be adding some more to Oracle. All right. And if you're in Oracle, stay in Oracle. Okay. Any questions on that? Gary? Anybody else? Okay, I guess you guys will let me know. Costco. So these couple pair of stocks look alike a little bit, a lot of these. There's no divergence on this one, okay? No divergence. But look at what you need to start learning and understanding is the divergence. It's going to help you to get good trades. Let's back this chart up. If you're trading this chart, let's go to a point where it doubled bottomed for sure, where we could really see it double bottomed. And we don't know. Well, it didn't actually double bottom, but no, there wasn't any divergence there. Yes, there actually was. What kind of divergence is this? What kind of divergence do we have right now? Based off of the two levels I just marked. Hidden bullish divergence is what we have. So if you were trading at this point, looking at the market, wouldn't you take a long trade on Costco at this point? This is how that hidden bullish divergence helps you. And what happens is, because this low here should not be lower. It should not be lower than this low. When it is, divergence, boom, we move to the upside. Market's moving up. That's a good trade for you. But we weren't looking at it at that point. Gary didn't ask me to look at it, so I didn't look at it. So next thing is, what you really want to see is this also. This is going to help you to realize this. And this is you're going to see this on a lot of charts. This is where I trade the market. So I would put a support level here, a support and resistance level here, right? So I'd put a resistance level here. Why would I do that? Let's say I didn't have anything on my chart, first of all, because it's hard to show you and have you thinking this. I have nothing on my chart. I'm looking at the market. You sold Costco today. You're ready to get back in. We'll talk about it. Let's look at this real quick. See this? So actually, if we take it like this, I don't want to go replay. But when we go like this, we now mark that level, right? So once we mark that level, we wait to see if the market comes back to it. And here it came back to it. So at this point, we had a level that was even, pretty much. But when we had a level that was even, what was happening with the oscillator? So we were even right here. And we came back here. So that was this level here. And what's happening at that point? Then it climbed a little bit higher. Then made a hangman. Then broke the hangman. The market was dropping. When this was going up like this, from this point back over to here, institutional traders were not on board with this move higher. And what happened? The market dropped hard. That's how it helps you if you are in the trade already, or even if you want to take a trade at that point. That's how it helps you. Okay? And that's all I'm trading when I'm day trading. I have nothing else on my chart. I don't have Ichimoku on my chart. I have support and resistance lines on my chart. And I just wait for a double bottom like this. If this would have came back, I would have looked for divergence, bullish divergence, and I would have took the long trade. All right. I'll look for a spot like this. Is there any divergence? Not on here. But if there was, if we had divergence, I would take that trade. All right. This top here, if we had bearish divergence, big bearish divergence, I would have shorted this market. This bottom here, if we had divergence, which we don't, I would have went long at this point. This is what I'm trying to just show you about the divergence. And it's at levels, and the levels are double levels of candles making a support and resistance level, or a double top, double bottom, horizontal support and resistance levels, previous levels, all kinds of levels. Whatever is a flat level. Even Kijinsen, I can do it. All right, so let's put Ichimoku back. I'll be long here. Do you have a picture of the bottom of the trend using the Ichimoku? I'm not sure what you're asking me with that. You indicated that the big cloud is rolling over is an indicator of the bottom of a trend. Is this applicable to daily charts only? No, this is applicable to all charts. It's the reason is because if any chart you go to, if you see a big thick cloud like we had on the previous one, but even on this, so we don't see a thick cloud on this, but what we see is the separation of Tinkinson and Kijinson. And the cloud wasn't that thick, all right, but we had this separation was too much. And then the market recovered, especially if there's divergence. But yes, anywhere on this chart, let me see if I can show you any. Not a lot on this chart, but we'll look at some other charts. But you could see this cloud got thicker up here when we were at this top, but we didn't have separation with Tinkinson and Kijinson. But I don't want to see a thick cloud like this developing, all right? When we're angling like this, see that? That's good. When we start flattening out like this, see what happens? It gets thicker. So then when we started angling again, that's all this right here. But then when we started double topping up here, we're getting volatility. That's what this is. Showing that's what you have here. So when that trend is strong, your cloud is thin, basically, to me. A lot of people will tell you when your cloud is thin or thick, so forth, that, you know, that's a good trend or that's a strong support and resistance and so forth. Do I like money flow index the best? I'm starting to, because I've been using the cumulative volume, but I've realized when I wasn't seeing as many divergences on the on the futures charts. So I was like, what the heck? What's the deal here? So I put on the money flow, and there were some divergences that the cumulative volume didn't show. All right, so then I started looking at other charts, not just forex. I mean, not just futures, but I started looking at forex, and I looked at cryptos, and then I started seeing more divergences, and also I can see the hidden divergences better. Sometimes you can't see the hidden divergences with the cumulative because it's a histogram. Now, if we turn it into a line, it could be different. Like if we did, I think we could turn it into a line. Let me see. But I still would use the money flow first. The oscillator. Let's see if we could turn it into a line. Histogram, no. We won't be able to change it. Actually, yeah, we could. And that's, you could use it like that. And then you might see you would see the hidden divergence better because you see these kind of peaks. But see, it's pretty much the same as the money flow. Look at. But see, now here's the areas where it's a little different. Now this stayed pretty bearish. This one didn't. It kind of evened out here, but then we had a low here, which indicated to me, right? If I see this low, let me pull this up. If I see this aiming to the downside like this, then I'm thinking we found a top up here because we doubled out, we topped out up here, right? So we hit the top right here. Let's take Ichimoku off because you can't tell. But see, we hit this top. And when we hit that top, look at what the money flow was doing. Then should have been good to go to the downside. But look what the cumulative did. It went higher. And then it went to the downside. So it pretty much didn't even really follow this, but this is following now. All right, so that's that's a little bit of a difference there. And also there was something else I wanted to tell you guys. But that's it. Everything should have money flow index. It's one of the more popular ones. So yeah, I'm pretty sure Thinkorswim has money flow index, most definitely. And I don't change anything. I leave it set at 14. I don't change anything. All right, so let's move on. Sorry. So we just did Costco. Let's do Apple. Let's put Ichimoku back. I've been having issues again with my computer. I just got it back too after a couple months ago. So I shouldn't be having any issues, but I am. All right, so again, first look at this. So look at this top. So this is how you're going to know. Look at that top, but look what was happening when it reached back up to the top. You had a big divergence at that point. It dropped off hard. Over here, you should have known to get out of this trade if you were in it, or to sell. Or else when you came to the fractal right here, sell it again. So many things you could see just because the smart money is showing you this. Now, and then again, you could look to get back long like this. So let me show you. So you could put your indicator, you could put a trend line on here. So basically take it from this high to the low. And then when we violate, so you're trading the same way that you would be trading on your chart. You broke right here, you would take a long right there and see what happened the next day, gapped up. Money flow started coming in, started showing a little bit of demand coming to the market, and then boom, it's into the market. So what do I like about this right now? I don't like anything about it right now, all right? Because money flow flattened out a little bit. When this has moved higher than dropped, money flow flattened out. I don't like that. And I think we're going to be more like in a ranging market with this Apple. We are bullish here, so maybe we just getting this correction. So let's see where this could take us. And I'm not sure if we're bottomed yet, because look at also I'm using CMO. All right, and when I use CMO, I'm still red. So we still have a little bit of bearish momentum. But let's see, first of all, let's see what the correction is. It's about 23.6. If it doesn't correct any lower than that, you know what this means? This is a strong trend to the upside. It's probably gonna drop a little bit more. All right. So that's 23.6 where we are. And if we did not drop any lower, then we could see our target 1-to-1 being, if we don't drop any lower, we'll be at about, we're looking for about 191.67. If it drops down to Kijinsen here, we're looking about 189.95. So in that range of this, once the market starts moving higher. All right, so I don't wait to get into a trade up here. This is the wrong area to get into a trade. More traders lose here because this is fluctuation level. It's the 2 level. You got your 1, your 2, and we're looking for 3. 3 could be here. 3 could be here. Once we find out where 3 is, 3 could come down to here. But at any cost, it's 1, 2, wherever 3 is, and then we shoot for 4. If you trade at 2, you've missed a lot of the move already. And then you're trading at a fluctuation level because it's a double top area. And a lot of times at this fluctuation level, because you would be like basically 1, 2, 3, and you couldn't get past 2. And that was a double top with divergence. So here we would look for the same thing. But now what we would see, if this market does push higher and we get here, and there's this money flow is aiming to the upside, we're probably moving higher. We're not gonna sit here. So we're finding support at the cloud. Maybe we get down to the Kijinsen, but in this area, quite possibly. I don't wait to take this trade up here, Gary. So if I don't take the trade at all, if I don't catch the trade down here, then what I'm gonna wait for is for the market to pull back to that fractal level that we do violate if we can't get into the trade. All right. You sold Apple at the last high. Okay, good. Well, get ready to get back into Apple. So I'd like to see a better correction because then I'd be able to get at a good level and push up to the, I trade Apple up to this level again, probably around 181.96 pretty much. So you sold at this last high. Does that mean the N wave strategy is superior to the breakout strategy? So the N wave strategy, the N wave is not really a strategy, okay? It's not a strategy at all. What I'm really actually trading is when the market corrects itself, I'm looking for levels where it could correct. So the N wave is just the structure of the market, the structure of the way the market moves. So like when we look at it, we could say here's an N wave, see? The market moves that way. If you're talking about breaking this level, that's something different because that's a fractal break. And to me, they're good, but they're risky. All right, because for me, I don't like to trade the fractal break unless I'm really close to it. Because let's say I take the trade here. This is my, at least my stop loss. Let's say I take this fractal break here. This is at least my stop loss if I'm going short. Let's say I want to take this fractal break right here. Now you could use the candle that violates because you want the momentum right off the bat. So that's why you don't move. Like once this breaks, then you could enter and then put a stop loss below. That would be your best way to trade it. Not to trade the structure, but to trade the level as if it was the candle, as if it was a level, and the market comes back to that level. If it comes back, you know you lost the momentum. So this trade won't work anyway. And it gives you a smaller loss than being down here and saying, well, if it doesn't go cool back here and I got that much room and then it go back to the upside. No, take the loss, get out, try to find what the market's doing and then get in. So it's not actually a strategy as far as like the N wave. That's just a wave. And then if we're talking about M value, that's just the target. All right. I can't explain it all real quick, but hopefully that got to you. Let's go to TJX. I don't love this one per se. Looks like too flat for me. Possibly going to push to the upside, but we're bearish on all aspects of Ichimoku anyway. You got a crossover here. You got a future that's dark, so you're raining, thunder and lightning. All right, and then this should be rain. This are raindrops. That was lightning right here, and then the thunder is a big boom. All right, so you hear the big boom. We're bearish. You go run in the house to get out of the rain because that's what's happening. The market is dropping, but I think we're starting to see a recovery. Okay, because we got a low, and then possibly a higher low. All right. So I don't like just looking at Ichimoku. And looking at this chart, I don't like it because I don't have a sure area to get into. But based off of what I'm seeing, looks like we may push up past this level. So if it does push up past this level, it's probably pushing up to this highs. And then if I mark my N wave, then we're looking at, let's mark that. Let's say it doesn't drop any lower, then the market would push up to at least this level here at about 75.35. That's where we would see 1-to-1. I don't like this chart myself right now because I'm not sure what's happening here. It looks like we could recover, but my signs with Ichimoku are too bearish, right? Too many bearish signs. 1 sign bearish, 2 sign bearish, 3 sign bearish, 4 sign bearish. So I don't love that. And what it more likely did is this. What it looks like it more than likely did was push up to this fractal. This fractal level right here. Dropped, pushed up to it, and dropped. Now, mark this low because we're in between this area. We want to see what the market's going to do. Now, if it did come back down to this low and you had divergence at that point, then trade to the upside. Maybe if you break the cloud, then we could start thinking about a long opportunity. The way it is now, I'm not interested in it. Yeah, stay out of it for now. So this one is recovering also, and I like this. So this is Blackstone, BX Blackstone. Again, what did I tell you guys about seeing your tops, right? Any chart you're trading, it doesn't matter what you're trading. It doesn't matter if it's forex, futures, cryptos, stocks, or anything else. You doubled up here. And look at what was happening with the chart. So from this point to this point, we were already going down. The smart money was not with this move right here. And there's the smart money kicked in, and look where it went. All right. Pay attention to these highs and these lows. We'll look at some other charts with some lows. There was divergence on this chart, and you probably could have caught a trade here also. Or long, you probably could have caught this. Let me show you why. You should have caught this. Not with Ichimoku. We're going to take it off for a minute because I just want to show you what I'm looking at. Because I confuse you if I tell you, oh, Ichimoku says this says that. So first of all, mark your support and resistance levels, first of all, because when the market gets there, you want to see if you got divergence. So first mark those. So why did this come down here? Where's the level? Let's see. Let's see where the levels are that it's coming down to. All right, so we got a little area here, which is a zone. Let's see what else. Put that on auto. It doesn't look like anything else major. Let me go to a higher time frame. Let's go to weekly. All right, so that level is its own. There's nothing else. So what you're going to look at is this. So if you just trade in the charts and you put your support and resistance levels on the chart, is there an opportunity to trade long here? Yes, there is. Because why? From here, let me mark this. Look what's happening there. But look what's happening here. All right. What's coming into the market? Demand's coming into the market. And there you go. Those are the things you need to see. So again, let's go to this chart. Let's go to this area over here and see. So that's after the fact, right? But that's what you need to see during the fact. So the market bottomed out here, double bottomed. What did we see here? Anybody? What type? We saw hidden bullish divergence right there. All right, because now actually when the levels, when it's even, I want to see regular bullish divergence. But there was hidden bullish divergence here because we had a low. The market was trending also. So when it's trending and you hit that low, but this is lower, all right, then that's hidden bullish divergence. So the market should be, the oscillator should be doing what the market's doing. So the oscillator shouldn't have came down that low. It should have came down to this level right here. So that oscillator shouldn't have came way down here. It should have came down here where this level is. Should have came right about there. And it would be the same as what the chart is doing. Because right here, that's what the chart is doing, right? Right here, that's what the chart is doing. There was some divergence there. And then right here, that is what the chart is doing up to this point. But then from that point, actually from this point in this area, it started, the smart money started going down. The chart kept going higher. The smart money went down. The market went down. That's it right there. Money flow index is good because it's really like you'll be using, it's used for stocks. Any asset, especially stocks, is really good for. All right. And then let's go to Tesla last one. And then I got one I want to show you guys real quick. Put Ichimoku back on the chart, because this is supposed to be the weekly weather report. So we didn't have any real divergence. We pretty much, actually we did, sorry. Because I didn't look at that. I thought we were even, but we weren't. Because when we look at the bottom here, that's this bottom. Now we pretty much evened, but that's here. Actually, it was here. All right. So I wouldn't have probably, I probably would have took a trade here and I would have not made too much. But then now the market got into this triangle pattern. All right. So I'm not sure what's happening here. We got a flat cloud rolling over a little bit, not really thick. We did push up to this fractal level once with a short, and then we shorted right here. So let me show you. Currently, here's the wave structure. So if this is the wave structure, we stopped the wave right there. That was the bearish wave structure, N waves. But then it attempted to do another wave, but failed to violate level 2. If it fails to violate level 3, then we're ranging in here. It could become a P wave. And then maybe the market pushes higher or lower. At this point, I don't do anything with this Tesla. If I'm in it, I stay in it because the money flow is showing positive. But as far as getting into it, I don't like anywhere where I am to get into it. All right. For me to get into it, it has to first break a bullish structure, which would be bullish fractal. When we break that, then I look to correct back to it. Then I look to go long. At this point, I don't go long. We did make a higher low, and then we do see demand coming into the market. So we should see Tesla quite possibly push up. Now, just because we have divergence doesn't mean the market can't drop and come back down to these levels. You will lose divergence trades. That's why I only really trade them at support and resistance levels. All right. Yeah, I did them all, Gary. I figured I could get them all in. I never do that for you, so I wanted to do that for you. And I'm going to give you a surprise on this one. So let's look at this. Plug power. I really like plug power as a bull. Well, if I'm looking at Ichimoku, guys, this is very bearish. All right, very bearish. All right, because you got, but when also Ichimoku tells me that it's possible that it may reverse. And I don't know how far it's going to go, but look at the cloud is super thick. Span A is flat and starting to roll over, but not quite. Span B angled down one. That's a big thing. But we don't have distance, but we're kind of getting flat with Tinkinson and Kijinson. Our cloud is really thick. Look at these clouds when you get to tops and bottoms. So this will show you, this chart will show you. This is why I say about clouds. I knew I'm at a top up here when I had this thick cloud. Let me go back to the replay mode. We could look at it even better. Right here. The cloud was thick, right? Look how thick the cloud got. Then I kind of realized I'm at a top. But look else what happened. We didn't really have, well, actually we did. Let's see where the divergence kicked in here. If there was divergence, let's see what happened here. Yep, see there was major divergence on this chart. Guys, when you just look at this right here, there was major divergence. This is the high, this is the high. This actually made a little bit higher. Somewhere in there. I can't say, but this is where we are. And look what it did, divergence. My cloud was thick. Not super thick, but it was thick. I've seen thicker clouds than that. That's a sign for me. And look at the distance between Tinkinson and Kijinson at this point. Too much. Disequilibrium. We're going to see the market probably drop. That's what I would be telling you. And what happened? The market probably dropped. Big time. Okay? So I want to show you one more thing. So I talked about that thick cloud. Let's go to another spot. So I showed you this thick cloud. Let's look at the bottom here. This bottom right here. See how if we could tell if we're at a bottom. How we could tell. So let's go to there because we'll see that big candle. So here I couldn't tell I'm at a bottom, but what's happening though? I wouldn't be able to tell I was at a bottom based off of the cloud yet. Look at this going down. Look at this going up. Money flow is telling me that institutional traders are not on board with this move. So let's see how we could start to see what's happening. There's no split here. My cloud is not that thick. Okay, now at this point, we already see what's happening with the market. So for me, I would still be, I don't call that a really big, thick cloud, but it's starting to roll over and it's flat. So I would probably think at this point, you could see the market drop again. All right, because it wasn't that super thick of a cloud. But then the market kept moving higher and you could see what happened. And then the market did go higher. So let's move to the next one. Let's go right here. We did this one, right? Let's go to this one right here. This is the last one because this one is just like that. But this one is even bigger. So go to the replay. Let's go to right here, all right? Before it pushed all the way higher. Before it pushed even higher, we already had, now you probably, if you trade divergence like this, you could lose some trades because maybe you put an entry here because you got a good rejection and you got this divergence. There's angulation is super strong though. Angulation looks really good. All right, so it looks like this market's going to move higher. That's what I definitely would be telling you. The angulation is still good. And then you would have made a little profit and then it pushed higher. So if you definitely shouldn't have got stopped out, but if you're out of your trade, you should still start thinking about shorting again because you know what happened? Look at this high. We didn't violate it. And look at this cloud got even thicker and flatter on both edges. All right. So now with that showing, we're still pushing a little higher. We're still pushing down with the smart money. Go with the smart money. Don't think this is going to go higher. All right. I mean, it could, but eventually it's going to lose its steam. We don't have a lot of distance, but look at, we're flat Kijinsen, flat Tinkinson. And then look at this. So what happens? Pushes a little bit higher. And then it starts to fall. Look at the money flow. It keeps dropping. And you keep hoping that it's going to go higher. The market. But the money flow keeps dropping. And the market keeps dropping. See? That is what you should be looking for. That divergence is monster when you're trading it. Okay, so that's it with the stocks. I'm all done looking at stocks. Hopefully that helped you guys out. And until next time, have a great one. God bless. So long.